Hello from the Bahamas, and welcome to the crowd. My name is Sherwood Neese. Last week, I spoke about how regulation crowdfunding and the online investment industry is democratizing access to capital for women and minorities. This week, I'm going to talk to you about the broad geographic application we see in regulation crowdfunding and how this industry is also democratizing access to deal flow across the country. But first, let's jump into the index, last week's numbers, and the top offerings. The Online Investment Index, which tracks the daily top 50 regulation crowdfund offerings, was down 45% or 323 points last week. This is the first time in 4 weeks that we saw a drop in the index. The week prior was an exceptional week with over $16 million in commitments. Last week, commitments dropped to 8.9 million, which, when we look at the data, is currently about the average given the growth of the industry to today's date. The top 5 companies that drove this week's index were, first, Boxable, a Las Vegas-based manufacturer. They make unfoldable homes. Yes, they say they literally unfold into a home in one day, and they do it at significantly less cost. Last week was the first week on the index, and they rose to the top, raising over $2 million from 1,223 investors at an amazing $226 million valuation. They already have deposits and purchase orders that they say add up to over $100 million in potential revenue. So in reality, that $226 million valuation does not seem overly or out of the ballpark, I should say. However, they do need to start shipping to prove that these purchase orders and potential revenue is there, because without it, there's not much in the marketplace right now. Back on the list this week after a 3-week hiatus is Tuttle Twins. They are a Provo, Utah-based production company that is making a cartoon that they say teaches children about freedom, economics, and the government. Last week, they raised $932,000 from 2,217 investors at a $9.7 million valuation. Next, we have Psychonics Corporation. This is their 3rd week in a row on the list. They are a Jupiter, Florida-based biotech company that is developing diagnostic and therapeutics for osteoarthritis. They are running a Series C offering on Seed Invest. Last week, they raised $286,000, down from $1.3 million the week prior, and they did this from 129 investors, down from 554 the prior week. So it looks like the momentum might be waning for this offering, and it should be interesting to see if they stay on the top 5 list over the next few weeks or if they fall off and come back on like some of these other ones are doing. In total, they've raised about $4.9 million from more than 2,600 investors at a $46.7 million valuation. Next, we have Fanbase. They fell off the list 2 weeks ago, but appeared back on last week. They are an Atlanta-based Facebook alternative subscription service that is helping users monetize their content and earn revenue. Users can grow their following organically for free, just like on Facebook, but there is the option to pay for a subscription service to gain exclusive content. This helps users monetize their followings, unlike, let's say, on Facebook. They raised $260,000 last week, down from $475 2 weeks ago, for a total of $3.1 million from almost 6,000 investors. I think there's a pretty strong signal here that 6,000 investors, many of whom are probably users of the product itself, are fed up with Facebook making money from the user's content without any revenue coming back to them. And perhaps this is a new way in which Facebook should be considering paying back their users for everything that they provide them. Finally, we have linenapp, a venture capital-backed San Francisco-based software developer that is allowing early users to earn tokens to help build value. So think of the first drivers for Uber being given tokens for helping scale Uber into what it is today, and then those tokens having value later on. Personally, I'm going to be interested to see if they think that these tokens are securities or not, because if they're promising a future value related to them, then it sort of smells like a security to me. Last week, they raised $243,000 from 211 investors. In total, they've raised over $3.2 million from more than 3,600 investors at a $19.8 million valuation. I think this is a fascinating play in the online investment space because really for 3 things. First, this is exactly the type of offering that VCs focus on. Yet the issuer obviously sees the benefit of engaging the crowd as investors. Second, San Francisco is a highly capital intensive city. So it isn't like the issuer needed to go to the crowd for capital, but clearly the issuer realizes it isn't about the capital, but what the crowd can bring to them in terms of marketing and awareness. And finally, C, it's in the blockchain space. This is just a hot sector all around for investor dollars. And this type of offering, allowing retail investors to invest in these up and coming blockchain technologies alongside VCs, really democratizes deal flow into the crowd. These three companies have a collective value of $322 million. If you watched last week's episode, you know that Jupiter, Florida, Boulder, Denver, San Diego, and San Francisco were the cities where the top five resided. This week, it's Las Vegas, Provo, Atlanta, and San Francisco, proving the geographic dispersion of these offerings and why it is important to have this alternative access to capital available for issuers that are outside of these capital-intensive cities like San Francisco. Regulation crowdfunding delivers not just capital, but other critical services like marketing that issuers might not get from VCs located in Silicon Valley. So that's it. Make sure to subscribe to our channel to get the latest news and follow me on Twitter at WoodieN, WOODIEN. This is Sherwood Nice with the Crowd, and we look forward to seeing you next week. Thanks.
Hi, my name is